Something massive is happening right now within the secretive deep wallets of Shiba Inu's biggest holders, suggesting a huge move could be brewing on the charts. Analysts are dropping their alerts. On-chain data is signaling a definitive shift in supply dynamics. Whales are moving silently, but their massive transactions leave unmistakable tracks for us to follow. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The concept of a whale in the crypto space refers to an individual or entity that holds a disproportionately large amount of a specific cryptocurrency, in this case Shiba Inu. Their actions, buying, selling, or moving tokens, can significantly influence market price and sentiment due to the sheer volume of assets involved. As of November 14th, 2025, the landscape is defined by the fact that the top wallets control a substantial percentage of the total Shiba Inu supply, making their movements critical indicators of future market direction. The token's market capitalization stands close to $5.4 billion, while its 24-hour trading volume is around $201 million, numbers which are directly affected by the decisions of these major players. Tracking whale activity helps the average investor anticipate potential large price swings, as the whales often accumulate silently during periods of low price and move their holdings before a major public announcement or rally. The current narrative hinges on whether these holders are accumulating for a massive push or distributing their assets in anticipation of a peak, which is a central question for the entire community. The most significant recent development in the Shiba Inu whale ecosystem is a clear and sustained move away from centralized exchanges, CEXs, and into self-custody wallets, signaling long-term holding intentions. Reports state that on-chain data is revealing strong accumulation signals, with over 18 trillion Shiba Inu tokens recently moved off exchanges. This major exodus from trading platforms is interpreted by on-chain analysts as a clear indication that big holders are planning for a long-term position, rather than setting up for a quick sale. This movement is not just a single large transaction, but a consolidating trend. Analytics further show that the holdings of wallets identified as whales have rocketed, jumping from approximately 23.7 billion to a massive 105.9 billion Shiba Inu in a specific cluster, confirming that big players are making serious, strategic moves rather than positioning for immediate profit-taking. This behavior contrasts sharply with the activity seen in other major tokens like XRP and Dogecoin in early November, where selling pressure and large exchange inflows were noted, suggesting Shiba Inu whales are moving against the broader market sentiment of caution. Despite the highly bullish whale accumulation signals, the immediate market reaction on November 14, 2025, remains relatively muted and consolidatory. Data shows Shiba Inu is trading near 900 units, having experienced a minor price decline of approximately 1.60% over the last 7 days, even while outperforming the broader cryptocurrency market's steeper downturn. The token is currently consolidating in a tight trading range, struggling to conquer the key psychological level of 1,000 units, the 24-hour trading volume. While showing a rise from the previous day's data, is still relatively low compared to 2021 bull market peaks, standing at $192.44 million. Analysts attribute this delayed price response to two factors. First, the majority of the whale action involves moving tokens into cold storage, which removes selling pressure but does not immediately create buy-side volume to drive the price up. It is an act of supply restriction, not demand creation. Second, the broader market remains in a state of fears as indicated by the General Sentiment Index, favoring Bitcoin dominance over highly volatile meme coins, which caps the immediate upside potential for Shiba Inu despite the underlying bullish whale moves. Reports note that volume has contracted, even though weekly gains slightly outpaced the meme coin category average. The on-chain evidence is overwhelmingly skewed towards supply shock preparation. On-chain data confirms a staggering 551% increase in large transaction volume, transactions over $100,000 recorded in a single 24-hour window earlier in the month, involving over 1.6 trillion Shiba Inu tokens. This spike in activity serves as a primary indicator of renewed interest from major players. Furthermore, the total Shiba Inu supply held on crypto exchanges has consistently dropped, reaching one of its lowest levels since 2023. As noted by analysts, this decline in exchange reserves to around 83.8 trillion tokens reduces immediate selling pressure, as fewer tokens are available for rapid disposal by traders. This metric, combined with the increasing burn rate, which has seen burn rates increase by over 100% this week, paints a picture of shrinking accessible supply. The largest whales, those holding between 100 million and 1 billion Shiba Inu, have been actively adding to their positions, demonstrating a collective belief in a long-term price appreciation despite the short-term price volatility. The creation of new multi-trillion token wallets in recent months further solidifies the accumulation thesis, with wallets moving enormous amounts from exchanges directly into cold storage. Analysts view the aggressive whale accumulation and off-exchange transfers as a highly bullish foundational sign, often preceding a significant rally. According to one analyst, this pattern, where whales congregate at local bottoms to purchase tokens during bearish market conditions, is a familiar trend observed before major price rallies. The implication is that these major investors believe Shiba Inu is deeply undervalued at its current price, near 900 units. The strategic removal of tokens from exchanges effectively tightens the liquid supply, meaning that any sudden surge in retail demand or positive news could result in a dramatic price increase due to a supply shock. Analysis suggests that while whale accumulation prevents crashes, it also delays rallies until sustained retail volume returns. The analysts stress that the consolidation phase near the 900-unit level is likely a spring being compressed, where a successful push above the falling wedge resistance, potentially near 1150 units, could trigger the next major upward trend, targeting significant resistance levels. This accumulation phase is seen as the foundation for the token's recovery, which is supported by the ongoing technological factors like Shibarium's utility push. The Shiba Inu community, often referred to as the Shib Army, has reacted to the whale movements with renewed excitement and speculation, as evidenced by a consistent increase in social media engagement. Reports highlight that Shiba Inu remains one of the most actively discussed tokens across trading communities, often driven by on-chain tracking updates shared by community trackers. Social media platforms are abuzz with the narrative of smart money's quietly positioning for a major move, interpreting the off-exchange transfers as a validation of the project's long-term utility. Developer Kusama has been subtly hinting at new utility-based integrations that are expected to further drive adoption of the Shibarium Layer 2 network. Though specific announcements remain under wraps, the overall sentiment is one of cautious optimism, believing that the technical and on-chain foundation being laid by the whales will meet the growing utility from the developer side, creating a powerful upward convergence. However, there are also community debates, where some fear that speculative capital is being diverted to newer meme coins, placing pressure on Shiba Inu to deliver immediate results from its utility projects. The short-term forecast for Shiba Inu, over the next 1 to 4 weeks, is characterized by a high potential for volatility, likely swinging between the current support level near 890 units and key resistance levels around 1150 units. The continued whale accumulation suggests that the downside is protected, as major players are buying the dips, but a significant breakout requires an external catalyst, such as a major Shibarium announcement or a shift in the overall crypto market sentiment away from Bitcoin dominance. Analysts suggest a confirmed breakout above 1150 units could rapidly push the price toward a major target of 2350 units in the short to mid-term. Long-term, over the next 3 months to 3 years, the outlook is profoundly bullish, provided the utility-driven ecosystem, particularly the adoption of Shibarium, continues to grow. Analysts stress that the token's future hinges on this ecosystem growth, with a successful scale-up potentially paving the way for the token to challenge its previous all-time highs, as the circulating supply is gradually reduced through burns and network usage. The long-term forecast is heavily dependent on Shiba Inu successfully transitioning from a purely meme-based asset to a utility-focused asset, which the whale activity is betting on. While the whale activity is strongly suggestive of a major price floor and future rally, a balanced view must acknowledge the inherent risks and red flags. The primary concern is that on-chain data also shows large wallets have sent hundreds of billions of tokens to exchanges in recent months, indicating intermittent selling pressure and weak support at higher levels. Furthermore, the massive circulating supply of 589 trillion coins continues to be the largest challenge. While burns are increasing, a price point that significantly challenges previous highs will require an unprecedented, sustained, and massive token destruction. The market's current cautious sentiment, favoring Bitcoin and newer, high-velocity meme coins, means that Shiba Inu needs to actively earn its gains, rather than relying on pure retail hype. The accumulation phase can also last longer than anticipated, and the funds held in self-custody wallets could be moved back to exchanges for distribution if the token price were to stall for an extended period or if a major whale decided to exit the market, a risk that always looms over the asset. Investors should view the whale activity as a strong indicator of long-term value, but not as a guaranteed short-term price pump. So there you have it. The secret behind the silence: Shiba Inu whales are not just holding, they are strategically stacking their reserves, removing trillions of tokens from the reach of quick sellers. This massive consolidation move is locking the token supply and setting the stage for a dramatic market event. It seems the smart money is betting big on the long game. Will this supply shock ignite the next epic rally? Keep your eyes on the chart, because this is just the beginning. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.